Welcome back to the Daily Crypto Roundup, your daily download of the stories moving the digital asset markets. Today's lineup is heavy. Ethereum has reclaimed $4,500 on the back of institutional demand. Bitcoin looks like it may have already set its September low, and Mantle has exploded to a new all-time high with a breakout pattern traders are calling textbook bullish. And just to keep things spicy, we're seeing signs of fresh altcoin speculation bubbling under the surface, with hype, ENA, and Sol open interest all surging. Before we dig into the details, let's take a quick look at the numbers. Bitcoin, $114,800. Ethereum, $4,480. Solana, $238. XRP, $3. Avalanche, $52. Dogecoin, 25 cents. Litecoin, $91.50. Total crypto market cap is holding firm at just over $4.1 trillion, with volumes slightly lower than earlier in the week, a classic consolidation before the next move. Now let's get into today's featured story. Ethereum has clawed its way back above $4,500. On-chain data shows something we haven't seen in a while. Serious accumulation in the $4,300 to $4,400 range. Nearly 1.7 million ETH has been picked up over the last week. And this isn't small retail wallets chipping in. This is big hands, institutional accumulation at scale. Exchange outflows back up the story. Coins are leaving centralized platforms at the fastest pace we've seen in months, which usually means one of two things. Cold storage, where tokens are taken off the table long-term, or staking contracts, where supply is effectively locked up. Either way, fewer coins available for sale. Pelin APA, an analyst with CryptoQuant, noted in a report this morning that futures open interest for Ethereum on the CME has surged to record levels. In her words, the current positioning looks identical to what we saw ahead of past ETH rallies. Open interest is high, funding rates are balanced, and exchange reserves are dropping. That's the combination that historically precedes breakouts. It's a powerful comparison. We've seen this movie before. Back in early 2021, similar on-chain signals marked the start of Ethereum's run from $1,200 to $4,000. In 2024, accumulation zones in the low 2000s set the stage for the climb past $3,500. The difference this time? Institutions aren't dipping a toe in. They're diving headfirst through ETFs, futures, and direct buys. And make no mistake, this isn't just about the charts. Ethereum has been overshadowed by Bitcoin's ETF approval and run past $100,000. But Ethereum is carving its own role. It's not just the world computer narrative anymore. It's the second largest crypto with real staking yields, thriving DeFi, NFT infrastructure, and a growing reputation as the stable institutional play. One strategist at Bernstein summed it up well. Institutions are treating Ethereum as a long-term allocation, not just a short-term trade. It's the balance between volatility and utility. So what's next? The $5,000 line is the key. Break that. And analysts say momentum could accelerate. Options markets are already pricing in higher strike demand, with calls stacked at $5,500 and $6,000 for Q4. That's not retail hoping for moonshots. That's professional money hedging for upside. Of course, there are risks. Heavy futures positioning can be a double-edged sword. If the market turns, liquidations cascade. And regulatory clarity around staking is still murky in the US, but right now, sentiment is shifting fast. Ethereum isn't playing catch-up anymore. It's starting to look like the institutional hedge alongside Bitcoin, and that's a narrative powerful enough to shape the rest of this cycle. My eerie opinion? This is the moment where Ethereum stops being just the alt to Bitcoin and starts being its peer in the eyes of big money. If $5,000 falls, the floodgates could open wider than anyone expects. Now let's move to Bitcoin, because history might be repeating itself. According to data reported by CoinDesk, Bitcoin has a tendency to put in its September lows within the first 10 days of the month. This year, the low came in around $107,000, and we've since bounced back above $114,000. If the pattern holds, the rest of September could be stronger, with a push toward $120,000 and beyond. Analysts are paying attention. One market historian told CoinDesk, "September is often weak for Bitcoin, but the lows usually come early. If $107,000 holds as the monthly bottom, we could see strength into the end of the month as macro headwinds ease." Now ask yourself, why does this matter? Because traders love seasonality. If you can anchor a strategy to past cycles, it gives conviction. And right now, conviction is what the market needs. The Fed's latest CPI print was in line with expectations, inflation isn't spiraling, and rate cuts are still on the horizon. That macro backdrop gives Bitcoin room to breathe. Now, I'm not saying history guarantees green candles, but if Bitcoin can hold above $110,000 through mid-month, bulls will feel emboldened. And remember, ETFs have created a new floor of demand. The idea that institutional flows could keep Bitcoin buoyant is more than just a narrative. It's what the numbers are showing. Our third big story today is Mantle. The MNT token has smashed to a new all-time high of $1.68, and the charts are clean. Technical traders are pointing to a double bottom pattern, a breakout above the neckline at $1.39, and upside targets around $2.28. It's one of those setups that gets chartists excited because it looks textbook. What's fueling it? Momentum and positioning. Mantle has been building developer activity quietly, and now price action is catching up. Traders are piling in, volumes are spiking, and the pattern is attracting technical money. Why do we care? Because fresh altcoin breakouts are a sign of market rotation. When Bitcoin consolidates and Ethereum grinds higher, attention spills into altcoins. Sol is already strong at $238. AVAX has been in the headlines, and now Mantle joins the party. These are the sparks that can ignite broader altcoin rallies if the cycle heats up. And it's not just Mantle. Data this morning shows rising open interest in Sol, ENA, and even Hype, one of the meme-to-utility tokens. Sol futures are seeing leverage build, ENA is attracting whale wallets, and Hype is, well, being hype. Retail loves it. And in bull cycles, retail energy often drives short-term pumps. So here's the bigger picture. Ethereum reclaiming $4,500 shows institutions aren't just holding Bitcoin, they're diversifying. Bitcoin's seasonal low may already be behind us, setting the stage for strength into month-end. Mantle's breakout shows altcoins are heating up again, with Sol, ENA, and Hype all showing speculative interest. Put it together, and you've got a market that feels like it's coiling. Bitcoin steady, Ethereum powering up, and alts catching fire. If the dominoes line up, September could surprise everyone who thought it was just another dull month. And as always, crypto family, a quick reminder. Whatever you're holding, keep it secure. I use a Ledger wallet myself, and you can grab one through the link in the description to protect your crypto before CBDCs hit. Drop your thoughts in the comments, hit like, follow, and we will see you at the top.